can't see through your skin. I'm not your guardian. I can't see through your skin. Can't see through my skin.
Mics are hot.
Mics are hot. We got
Check.
What's up, guys? welcome, everybody. If you guys can hear us, just throw a yes in the chat room. We are live. What's today? Today is March 30th, 2021. Can you guys believe Q1 is over?
No,
Isn't that wild?
No, we got one more day.
it's ridiculous.
Anything can happen.
Yeah. I'm levering up, 10x to try to make sure I hit my quarterly return
That's it.
targets.
All right. Nice. Yeah, before we went live, we were just joking about, or not joking, I guess laughing at what I thought was fake news, but apparently Volkswagen, what did they change it to? Volkswagen?
They're going to be volts with a T, volts,
Yeah.
wagon, like electric volts.
Because Americans
Volkswagen.
can't pronounce the word correctly?
I think because
Isn't
they're
it more
transitioning
EV?
EVs.
Yeah, they're trying to get that EV.
That's what I thought it was. I thought they were just trolling Americans because we can't say things correctly.
I can say Volkswagen just fine.
Yeah. Okay. Good. Nice. Well, welcome, guys. Got a lot to talk about today. The title of the show is "This is the Calm Before the Storm." Dun, dun, dun. Now, what does that mean? Well, the markets are actually at some pivotal moments, and both crypto and stocks have been consolidating. Like Bitcoin is basically at the exact same price from almost 45 days ago. Stocks have been in this upward channel, and you can see like prices just kind of squeezing. Volume isn't really going anywhere. It's just kind of been slow and steady.
It's been a real snoozer.
Yeah.
Yep.
But I mean, that's okay because, you've got some meme stocks that have gotten hit really hard, a lot of volatility there. We've also got altcoins in different sectors that are popping off. And so, yeah, a lot to talk about and some big potential moves ahead, which is, it could be a good storm, could be a bad storm, depending on what your goals and your opinions are. But, yeah. All right, well, let's go ahead and jump into it. So, Nikki, you were saying you wanted to have a little quiz, and
Yeah, let's do a little poll.
okay, let's start with
us.
this. And you guys in the chat
And
answer this
amongst
too.
Yeah. Join us.
So, when do you guys think we're going to get a move either above 60? So, again, we've been kind of stuck in this range for a little bit of time, which is good. Consolidation is healthy in the markets. But when do you guys think, what day are we going to either break convincingly above 60,000 or below 50,000? When do you guys think? Nikki, you start.
I think we could see a breakout by Sunday.
Oh, you're calling this weekend.
I'm calling this weekend.
Okay. Closest
what I'm
one
thinking.
closest one gets, I don't know.
Closest one gets a Bitcoin.
Closest one gets a Dogecoin. How about that? All right, she's calling by Sunday, Trav. What do you think?
I'm going to call it by Saturday.
Damn.
Oh,
Even more
gotta
aggressive.
one up me.
It's like those Price is Right games where, you bid $1 under. I'm going to bid 1 day under.
Okay,
There you go.
all right,
Yeah.
all right.
I'm like you. It's like testing the high end of this range, and I could see it just breaking out.
Yeah,
Yeah.
it looks
Imminently.
ready to roar.
I agree that I think it could pop at any moment, but if I were going to play some options on this or something, I would not have an expiration prior to the 15th of April. So I think it's going to be, it could be
A
up
few
to
weeks.
another couple of weeks. Yeah, about 2 weeks from now. So,
Pragmatic.
Yeah.
I like it.
yeah, I think we could get maybe one higher low or something funky in here. I don't know. The market, it's primed, but I just don't know if it's going to go this weekend. We'll see.
Yeah.
Are there any historical patterns as far as seasonality to Bitcoin's price moves? I thought we've talked about that before at one point.
Yeah. And like, this trend has been a lot faster than previous cycles. But, you can see from, if we just measure some times here, Where is my time thing? I always lose this. Basically, you know, it was about 30 days from the 40K consolidation. And then you can see from this local top, you know, it's been over that. So the fact that price is not, like the trend is not speeding up is actually a good thing. You know, if price was just kept breaking out and it got parabolic, I would be selling more quicker.
Yeah.
But the kind of the one thing that I'm thinking about here is the fact that, you know, and actually, let me just pull up my tweet. So this is something that I was just chatting about today on Twitter, and I don't really do a whole lot on Twitter these days. I don't know. What do you guys think of Twitter?
I love Twitter.
I love it too.
You guys, like, in what way do you love it?
I'm definitely more of a consumer than a producer on Twitter.
Yeah.
But yeah, but
Same.
I love it as a source of information. There's a lot of noise there too.
Yeah.
And a lot of like BS and arguments and stuff.
Yeah.
But there's also a lot of funny memes. But there's also, for investors on the stock side, there's actually a lot of really thoughtful people who will post their research or stock ideas. So yeah.
Do you have a way that you feel good about, like, filtering content? Like, do you have saved lists?
Yeah, oh yeah. I'm a huge user of lists, so I keep a number of different lists under different like themes. I have stock picker list, investing more broad list. I've got lists that cover themes like quantum computing, or I created one the other day. It's public company CEOs. I think that one's public, so people can go follow it. But
Yeah.
that's really helpful. I think lists is one of the best ways to curate Twitter and get like specific information about the things that you care about.
Yeah, I agree. I have a bunch of private lists. What about you, Nick?
I'm not as organized with the lists I need to be. I need to get there. I have like a tax Twitter list, but
So your lists are like your closet? Just too much data?
dang, sick burn.
Zing.
Wow. No. Yeah, my lists are like my closet. But I basically just I'm like Travis. There are a lot of great thought leaders in investing to follow, money managers.
Yeah.
I follow a lot of tax pros. I follow a lot of financial planning, you know, pros, and I follow the IRS, you know, to stay abreast of tax laws, tax changes.
Yeah, I guess, you know, I've on multiple occasions thought about actually just getting off of Twitter altogether because it's so damn toxic in crypto Twitter. Like, again, I've kind of pulled back as like a passive observer, and every now and then if I think I see something important or have something important to say, I'll talk about it. But I think there's a lot of, like, especially in the Bitcoin world, there's a lot of people just posting what they think other people want them to say.
Yeah.
You know, like pumping Bitcoin's price, or like, oh, to the moon, laser eye, like that kind of shit. And I'm like, that's cool and it's fun, but as an investor, it can be distracting, and it can make you make stupid moves in the market. So I try not to go too deep into that stuff.
Twitter definitely has a different feel than equities Twitter.
Yeah.
Or, you know.
I think Bitcoin Twitter is the best. Like, it's hilarious, but you know, the fighting and like the tribalism is just real toxic. And I'm like, I can do without 99% of that shit.
Yeah.
So anyway, what answers did you guys give us?
Yes.
So we got a lot of people saying like
Lisa
within the
says
next
April
week.
15th.
Okay, April 2nd, April 16th, 15th. Okay. So we got a lot of
Tomorrow.
people in line with what we're thinking. Interesting.
Nice.
Okay, so here, I don't really know about timing, but let me just show you guys the data that I ran. So this was my tweet from earlier. I said, you know, Bitcoin's about to close its 6th consecutive green monthly candle. So there's only been 1 or 2 times that this has happened in Bitcoin's history, depending on which exchange you're looking at. But if we're using Bitstamp, which has the longest history, the last one was in early 2013, and then this was followed by a 75% pullback. And so I don't really think we're going to see a 75% pullback. Sure, that could happen, but the market was a lot less liquid back here, and there were only a handful of exchanges. But this is really what we're looking at. So the big breakout in Bitcoin really happened around that 10 to 12K zone. And ever since then, it's just been boom, 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 green, 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 right? So literally went from, 10K to 60K in 6 months. And that can't just continue on month after month after month without a pullback. It's just, sure, it could, but the probabilities of that happening are like almost nothing. At some point, we're going to get a dip or a pullback that scares the shit out of people.
I agree.
Yeah.
Yeah.
And that's good. It's healthy.
That's
it has
Bitcoin.
to happen.
That's what it does.
Yeah. Yeah. And the narrative, and this is another reason why crypto Twitter can be so dangerous. A narrative that I've seen is, well, institutions are here. They're not going to let that happen. Yeah. Okay. We'll see about that. Eventually we will get, like, the dips so far have been very, very tame, very methodical, very pretty,
Yeah.
you know, very easy
Like
to look at.
20%.
Yeah, I mean, even 30%, yeah. But in the last bull trend, we had, you know, I think it was what, 7 or 8 dips of over 35%.
Yeah.
And some of those if you look at the daily chart, some of those looked really scary. It looked like the trend could like fall apart at any moment. And we will have some of those. So just be prepared. But anyway, so this is looking at, you know, early 2013, basically had 6 months where, you know, price went from, you know, $5, $10, $20 or whatever up to 260 and then crashed down 75%, stabilized, and then kept going. And then, you know, kind of zooming in on the daily chart, you can see what's happening right now. We're still making higher highs and higher lows, and we're kind of squeezing into the 60K zone. So this is what I mean by the calm before the storm, is like, the storm doesn't necessarily have to mean it's like a bad thing or it's impending doom. The storm is just violent, turbulent price action. And that could be a parabolic move to the top. It could be a trap and a squeeze and a shakeout to the downside. But just know that the longer that Bitcoin's price consolidates, typically the bigger the move, the explosive move is going to be when you get outside of that range.
Yeah, and it's definitely from a technical level at a do or die area. I mean, if that trend line of support breaks down, that's where what you're talking about could, you know, those explosive moves that could happen big time.
Yeah.
If we end up holding up and buyers step in to take this thing through to a new high, you know, then I'm thinking, okay, parabolic move from there, then that's where, you know, we don't know how high the parabolic move will go.
Yeah.
But then, okay, barely any major correction, parabolic move through 60K. Okay, guys, expect that we're going to see a correction from here.
Yeah. And it depends. I mean, look, it might not even go parabolic. It might just, it just might trend to the next fib extension level. So
and lose steam,
yeah.
you know?
Yeah, exactly. So I've got some confluence. I don't have it all drawn on this chart to keep it simple, but my next major zone is up in the mid 70K area. So if we break that 60K area, that's kind of where I'm looking at as the next immediate zone. But if it does go parabolic, I wouldn't be surprised to see it go through 100 quickly. If it does that, though, and it looks unsustainable, yeah, I'm going to be, you know, moving a lot of chips around. Yeah.
You got to be ready. Yeah.
Yep.
There's this little white swan that's hanging out behind the scenes with a US-based Bitcoin ETF.
What's that small company's name? It starts with a F. Fidelity? Is that what it's
Yes,
called?
Fidelity.
Just a small little no-name asset manager, right?
Yep, Fidelity, and
Never heard of them.
a couple others that have filed as well. So there's that little white swan hanging out there as well. Could it be a 2021 event? Maybe so. I keep saying that I think it could happen this year.
Yeah.
No guarantees, obviously, but
Yeah.
that's also something that, especially with the right timing, could add some fuel to the fire.
Yeah.
It's definitely an exciting time to be an investor in Bitcoin.
Yeah.
In crypto.
I mean, it feels great to be making a lot of money, but also to have a lot of the thesis that we've been talking about, you know, show up, right? Since the early days, we've been, you know, beating the drum on this stuff. And it's just cool to see, like, if we jump over just to look at how traditional finance is coming our way, you know, here's another push from PayPal. This just came out. They're basically improving the way they interact with crypto. You know, again, it's not perfect, but, you know, we've got PayPal really stepping up. Also, Visa's like, hey, don't forget about us. The news yesterday that came out was they're going to start settling transactions with USDC, so the stable coin, through the Ethereum blockchain, which, again, this is a step in the right direction. These little things to me are more like evolutionary, not revolutionary, you know, but they're either going to adopt and become part of the system, or they're going to be made completely irrelevant. That's just where we're headed. So it's just nice to see that. And there's certainly this year, you can just feel like week after week, it's just positive development after positive development. Mm-hmm. And I think the price reflects why that's been happening, right?
Yeah.
why we've gone up so quickly and so much. But again, I always like to be pragmatic and say, like, look, when you go up that big, that fast, you know, shakeouts happen. And so will it come below 60K before blow off top? Maybe. But instead of trying to make predictions, this is another thing I was saying on Twitter today. I don't try to make predictions, right? Predictions are useless. The only thing that matters is how you manage your capital around possible outcomes, right? So I think like a chess player, it's like, what are all the things the market could do based on the things that I see on the technicals and the fundamentals? And what do I think is most likely to happen? And then let me plan my trades in a way where I'm not going to get hurt no matter what the outcome is. That's, to me, it's like win-win scenario. Where people get crushed is they try to look smart on crypto Twitter by saying, Bitcoin's going here, exactly, I know what's going to happen, and then they're wrong, and then they look foolish, and then they lose all their money because they gambled it all on red instead of black. And, you know, the markets are not absolute. It's a probabilities-based game.
Yeah.
So,
Crypto is no different. You still have to go in with a trading plan.
yeah.
I mean, I know some people don't do that. They're just hodlers for life, right? They just buy and they're like, I'm never selling this. Boom.
Yeah.
But there's still that price movement that can happen and make you emotional.
Yeah.
And then your hodl strategy may not end up being a hodl strategy because you panic out. So
Yep.
always, no
I've
matter
seen that
what,
1,000 times.
Always, no matter what, go in with a plan.
Yep, 100%. So yeah, so that's kind of where, you know, we're sitting at right now with Bitcoin is a pretty crucial area. So we'll see who wins the Dogecoin. It will be, I don't know, maybe we can save the live chat. I don't know if we can do that. If somebody in chat nails it, let us know. We'll send you one Dogecoin. All right. Yeah. Unfortunately, the impersonators and the scammers ruined Bitcoin giveaways. Like, I went back and calculated like the Bitcoin I gave away in 2015, and I'm like, oh shit, that's millions of dollars. Like, wow. Okay. Well, it'd be fun to continue to do that, but unfortunately, the giveaway scammers ruined that. And if we did like a giveaway on YouTube, it would get taken down in like probably an hour because the bots would flag it as spam. So fuck you, impersonators. I'm so over it. That's another reason I almost like said screw social media altogether, is like there's like 50 Chris Dunns out there on different platforms talking to people and trying to scam them out of money. So
Yeah.
What a lame way to try to make a living.
yeah,
They call it
leeches,
on
man.
your own YouTube videos. I'm like, man, they are ballsy.
Yeah. Yeah, they don't care. I mean, you know, I was one of the first guys that started happening to, like in 2015 and 16. Now it's not just crypto. It's like beauty YouTubers
everybody.
and all finance, all make, you know, like entrepreneurship stuff. Like, yeah.
Everybody is getting attacked.
Yeah. All right. So moving on, let's talk about stonks, because stonks are also in a position where it's like calm before the storm, right? Oh,
Yeah.
you guys have been falling asleep
Well,
over there.
I said today that I was bored with the stock markets in our chat because
Yeah.
I don't know, the last couple of days I've just been bored.
Well, you know, the market does this, and it's always so annoying for me when it hits all-time highs and it just freaking chills at all-time highs
Yeah.
forever, doesn't break support levels to give us deeper corrections, and you know, you think it's gonna correct, and then it never does. You think it's gonna happen, and it never does. And
Yeah.
so yes, it does feel like, I mean, but eventually something's gonna have to happen, and
Yeah. Well, here, so I just want to throw my 2 cents. Obviously, you guys are the stock experts, but one thing that I've noticed, you know, having previously traded the S&P 500 E-minis, like I noticed a longer term pattern that would play out. It was like 3 phases. It was like phase 1 is a slow trend that would develop over like a few months. And then phase 2 was a fast crash where it would pull back and give back like most of those gains in a few days or a couple of weeks. And then that would be followed by like 3 to 6 months of volatility. And then you'd go back into phase 1. So, and it feels like right now we're kind of in that phase 1 where it's, like you said, Nick, it's grinding. You're hitting all-time highs, but it's not exciting. Low volatility, low volume, sucks for day traders, which is good. We don't day trade.
Yeah.
but then you get that fast crash. And during the fast crash and the volatility, that's when it's A, profitable entries for swing trades or position trades, and B, like the volatility makes it more fun because you can even like scalp a little bit in there if you want to. But I don't know. Yeah, what do you guys make of that? I mean, that's what the price action kind of looks like to me, as we're in that grind, but you know, it's really difficult, if not impossible, to anticipate when that's going to end. Like, this could continue for months and months and months, right?
Yeah, there has been some volatility in some individual stocks in some certain areas of the market. We talked about this a bit over the past 2 or 3 weeks, but you know, there has been quite a significant sell-off in things like recent IPOs, SPACs, certain concept and momentum stocks. Those have pulled back quite a bit. And I thought we were maybe going to get a little bit more of a market-wide flush, given what happened with the hedge fund out of Asia that got liquidated last week.
Yeah, what was that?
Archegos?
Archegos?
Archegos? I don't know how you say it.
Archegos?
Bill Huang, he used to run Tiger Asia, which was a large long-short equity fund that was an offshoot of Tiger Management, Julian Robertson's famous hedge fund. And so Bill, I guess, went off on his own to manage his own capital and some family and friends' capital. But apparently this guy was levered up like 5 to 6 times, which is really unthinkable when it comes to a long-short equity fund. I didn't even think the prime brokers would allow you to get that kind of leverage. Like, all of the long-short funds I ever dealt with or ever knew, at most would be like 1.5 times leveraged.
Do you know what size this fund was? Like multi-billions?
Yeah, like 10 to 15 billion of equity capital, and then with leverage, apparently 50 to 60 billion of notional capital.
Damn.
Including the leverage.
So was that like Chinese banks that were backing that then?
This was Nomura, this was Credit Suisse, also
Wow.
Goldman and Morgan Stanley also had some exposure, so it was the large global banks.
Yeah.
And what's interesting about it is, well, there's a few interesting things about it, but this guy, his risk management was just atrocious. I mean, I've never seen such bad risk management. First of all, the fact that he's levered 5 or 6 to 1, if you do the math on that, that means if your portfolio takes a 15 to 20% drawdown, you've just wiped out your entire equity.
Yeah.
So a 5 to 10% drawdown in your portfolio, which is not out of the question in any kind of market environment.
Happens all the time.
All the time.
Yeah.
That could actually cause you to get margin called and liquidated. So it's just shocking to me that he was running his fund this way, and it's shocking to me that the prime brokers even allowed him to get this kind of leverage. So he was also concentrated in some really terrible stocks. GSX, the known fraud out of China, apparently he was involved in helping squeeze that stock over the past year.
Was that the ticker GSX?
GSX, yeah. This is a known fraud, still trading on U.S. markets. The SEC has been asleep at the wheel on this for 3 or 4 years.
Oh, wow. Yeah, this thing's down massive.
This thing should be at 0. This is another luck in coffee, but for whatever reason, the regulators are still allowing this thing to trade. And Bill Huang, he's in here with his fund, owning it as the 2nd or 3rd largest position in his fund. And so there were some other interesting names that are real companies that he owned as well, like Viacom, Discovery, Baidu. You know, those are real companies, several of which we've owned over the past year or so.
Yeah.
And like Viacom went from...
Pull Viacom up.
Yeah, Viacom's a great example. We bought this during the March 2020 crisis when it was trading at 4 times cash flow, when it was trading below $20 a share. The thing went parabolic over the last couple of months, ended up peaking at just over 100. And then within like 3 or 4 trading days was down by more than 50%.
Wow.
Part of that, I think what happened here was Viacom smartly, the management team said, our stock's gone up more than 5x in the past year. We think it's now trading at a pretty high valuation level. So what they did was they sold stock. They did a stock offering at $85 a share, which was actually slightly below where it had been trading. And that caused the initial decline. And I think that was enough to actually start to force the margin calls for Bill Huang's Archegos Capital.
So his liquidation is what caused this like death spiral?
Yeah.
Wow.
So this stock, Baidu, Discovery, GSX, a few others in his portfolio were all down like 40 to 50% within 2 or 3 trading days. And these are large cap liquid stocks.
Yeah, yeah.
These are multi-billion-dollar market cap stocks with, you know, a lot of liquidity, and one fund that got over leveraged was responsible for
So are they
massive
completely
moves.
wiped out?
Yes.
Damn.
From what I understand, they are toast.
Yeah.
Risk
Their equity is
management's
gone.
important, folks.
So what you're saying is it doesn't matter if you're a newbie crypto investor or a $1 billion+ hedge fund, you got to manage risk.
Yeah. It's like money management 101. It's just
Yeah.
absolutely mind-blowing that this guy was running at that kind of leverage level. It just makes no sense.
That's insane, man.
Yeah.
Yeah, I mean, did he say like why he did that or what the thought was? Like, why would you put yourself in that position?
I don't think he's talked publicly about it yet. This thing just developed like last week too.
Yeah.
So he's
What was that fund? I think it was a couple years ago that they were, what were they doing? They were selling premium on like nat gas futures.
Oh yeah, they were doing like selling nat gas options, call options or something like that.
And I guess they were consistently making like a few points a month, but then like they knew if there was some kind of spike in price that would basically wipe them out. And all you have to do is like look at a historical chart and nat gas every couple of years it like has these spikes. Like why would you put yourself in a position for impending doom?
Yep.
Like I just don't understand how guys that are managing hundreds of millions or billions of dollars can't see that most basic shit.
Yeah, it's truly basic math. And
Yeah.
if you've ever like done back of the envelope calculations, you can see how obvious it is that you shouldn't be running a 5 to 6 times leverage with that kind of volatility. I mean, stocks just generally, even if you have a pretty well diversified portfolio, like we showed before, even the broad market, S&P index, whatever, can have 10% corrections like that.
Yeah.
So what are you doing?
Crazy.
But it is interesting because like you showed in the S&P 500 chart, it really doesn't look like what's happened in the past week or two was that meaningful, but in certain specific stocks, I think people really felt that. If you were in Viacom,
Yeah.
I have a very small runner position left in Viacom, and you know, it's quite a move to see that.
Yeah, that
down
was
and-
astonishing to see.
Yeah. Even so, just taking a look at the Nasdaq for you guys watching the video, you can see this. If you're listening to the audio podcast, you won't be able to, but the Nasdaq is testing a major area of support right now. Not just the 100-period moving average, but prior, 2020's resistance turned into support. And it's interesting because like there have been so many bloodbaths, and we've talked about this in past weeks, but as of right now, the market's really only off all-time highs like 7 or 8%, right? So it's wild to think about like when you start to see these bifurcations where as a whole the broad market's just kind of holding up and looking boring, but inside of that there are a lot of really wild stories happening. And I guess the question is where do you find opportunity in that? How do we make tons of monies?
I've been playing around with some momentum stuff and kind of starting to get some, either busted IPOs, tech stocks that are down over 40%. I've picked up a few other momentum type or more speculative type plays. One in the SPAC world. So, there have been deep enough corrections to where starter positions on my end, I've started to take some starter positions.
Nice.
But as you can see on the Nasdaq chart, if you actually look at this, it's coiling up right now.
Yeah.
I mean, it's ready to pop in one direction or the other.
It's the calm before the storm.
It's the calm before the storm, exactly. But like really we're coiling to the point where it's gonna definitely need to move here soon, I would think. And so my thought process here is I'm trying to be patient because there are other names that I'd love to pick up some Zoom eventually, I'd love to pick up some Bumble stock, which is a recent IPO, but
I haven't even looked at that
I'm
since
trying to be patient because the market looks like it could go either way. It could either break down. We could see a deeper correction in the Nasdaq. Maybe that pulls down the S&P a little bit, or we see that technical area break out higher. The market holds up, and momentum growth tech becomes loved again.
Goes back in play.
Yeah. So I'm wanting to really get better entries on many things, and there are opportunities out there. Especially with the things that have moved and corrected so deeply, but there could be more on the way. And there are still a lot of overvalued companies even after the corrections we've seen in some of those names.
Yeah.
So
By the way, what do you guys make of Bumble? I haven't looked at this even since IPO. It looks like it's just kind of trending down.
To me, that looks like it could break down.
Yeah, absolutely.
It looks like it could go lower from here. So I haven't initiated a position in it because I think that we could see lower, especially if the Nasdaq breaks down.
Yeah.
So
It would be nice to see the stock market cause some pain, just with pull the rug and really rip people's faces off and give some good buying opportunities.
It has in areas of the market where I think a lot of retail investors were overextended. It has caused some pain. You know, it's caused, especially on the SPAC side, where there's been quite a bit of sell off there. The EV sector has seen pretty big sell off, so there has been some pain.
Yeah,
I actually think it's super healthy what's happened so far, because it did punish the areas that were really the unhealthiest areas of the market, the most frothy and the most ridiculous in terms of like the stories that were being told about some of these junk companies.
Yeah.
And that's cooled off. And you have some of the bigger names like Apple and Google and Microsoft's of the world that generate significant profit and revenues and are growing and are at reasonable valuations. Those have held up.
Yeah.
So this is actually pretty healthy action overall.
I would agree.
Yeah. So Trav, as a former hedge fund guy, managing, $1 billion, how do you
Not
think
6 times levered.
not 6 times levered, but as a former guy on the dark side and a part of the evil institutional people, no, I'm just kidding.
Sure.
How do you feel like those guys and ladies are feeling and thinking right now? Like, are they just trend riding? Are they nervous? Have they gotten liquidated? Like the good funds that you know of?
I don't think the good funds have really changed much of what they're doing. I think they probably saw some opportunity in areas like SPACs and started to maybe get a little bit too aggressive, and now they're starting to have to pull back on that. But I don't think their strategies changed too much. I mean, they, especially the long short funds that were probably short some of the junky stuff, they've actually had probably a pretty good month or two. Like I had a call from one of the best fund managers I know. We talked for like an hour and a half in January, and he was like, dude, I don't know how to approach these markets anymore. He's like, I can't short anything. My short book's not working. All the junk is flying in my face. Half of these SPACs are fraudulent. He's like, I don't know how to make sense of it.
Yeah.
And now,
So basically what you're saying is like he found good shorts that should be obvious shorts, but
they weren't
retail or
working.
whatever is just driving them up and squeezing.
yeah. And so when you get a little bit more dispersion like this tends to actually benefit your really good stock pickers, your long short equity managers that are short trash and long quality stuff.
Yeah.
And that will tend to benefit those managers. So those managers are probably doing pretty well.
Yeah, that makes sense, right? Because a lot of the easy stuff from last year is up so much. Zoom, Peloton, right? All the e-commerce stuff that did well through 2020, like it's already up a ton and had pullbacks. So I do think you're right. Like the stuff that's trash, that's up high, needs to come down to earth. And anything that's good that does get a big washout, that could be, good, like you said, Nick, momentum buying opportunity.
The unfortunate part about the kind of shift in the environment is that things get harder. You have to start doing more work again and more research work, and the opportunities for profit aren't as fast and easy. Like we were picking out stocks and they would double in a month, and we're like, okay, cool. We liked this for the long-term opportunity, but it just doubled or tripled on us. So okay, we'll take it.
Yeah.
But like now it's getting harder again. So now I just have to get back into the trenches and do more work. But,
Yeah, I kind of mentioned this before that like everybody that was new to the markets in 2020, now their skill sets are really going to be tested. I mean, these environments are where the investors are made. If you, like you said, you do have to do more work. You have to make sure that fundamentally you know what you're buying, and it may take time for it to play out. That's normal. Like last year was not normal. So
buying SPACs on a rumor of a deal, and the SPAC will be up 30% on the rumor of a deal. You're like, what?
Yeah.
Yes.
Look, I guess that's a sign of the times, right? We just have a lot of money chasing and yield right now.
Yeah.
Yeah.
And that's why I'm still bullish on Bitcoin, even if things get unsustainable, there's just so much money in the world, right? Well, so much fiat,
right?
Printed money, right? Yeah. And there is a finite supply of sound money.
Yeah.
Bad money chasing sound money number go up, right? Like, and again, I don't want to just say that as like a blind, like Bitcoin's always going to go up, because it doesn't. It's has scary drawdowns for a lot of people. And that volatility, if you know how to trade, can actually be profitable too. But I guess what I'm saying is, you know, there's just a lot of money chasing bad deals, right?
Yeah. I don't fully discount the potential or the probability for the stock markets to actually have a euphoria moment again, even this year. It's very possible that euphoria comes back.
It's kind of tough because right now, you know, as an investor, you don't really want to buy bonds, right, and take risk off the table because they're still not really giving you much yield, and you don't want to buy them because we know for the next 3 years the Fed is going to be accommodative with interest rates, right? So like interest rates probably are going to stay low.
And fiscal policies, just like they're bringing out the freaking bazookas.
The bazookas are coming with fiscal policy. So it's kind of like, well, what do? Well, to me, my mind goes to people are still going to need to take on risk via equities over the next few years at least. So that's kind of where my head's at, and I can see us busting back to all-time highs, you know, in the face of rising inflation and all these things that we're, you know, looking at, fiscal spending, you know, everything. I can see it happening, but I'd prefer to see a deeper correction for sure. I mean, I think that would be good for the markets to really just 10% more correction from here, and then we'll really see some value come to us again and some buying opportunities. Because right now it's like, okay, what do? Okay, you don't buy bonds. You're buying stocks at all-time highs. Okay, you're buying Bitcoin at all-time highs. It's a hard time to be constructing a portfolio if you're just now coming in. Yeah. Really.
That's a good point.
Yeah, I mean, there's a lot of downside risk, right? And again, we're not financial advisors. I don't know if we said that yet, but, you know, this isn't financial advice. This is for entertainment and education purposes. But, you know, we talk about what we do, but obviously everybody's got different risk tolerances, right? And different goals and timelines and stuff like that. And it's really hard to package our opinions that would fit everybody. But with that said, I mean, if somebody was coming in right now, like I get the risk on the downside.
Yeah.
But also, I mean, there is a lot of opportunity because of the volatility. Like there's a lot of stuff that's making big gains in crypto that are still good movers, right? And like momentum plays have been on fire the past couple of months in altcoins. Again, you got to be your skill stack, your skill level to if you want to trade altcoins to accumulate more Bitcoin or accumulate more fiat that you can invest into other stuff, your skill stack better be pretty high if you're going to try to trade altcoins at this point. Like, sure, when all tides are rising, everybody looks like a genius. And again, we make fun of the Moon Boys on YouTube, but look at them. Like right now, they look really smart, but they get destroyed in the bear markets, right? So you just have to be disciplined, and you have to know how to know where and how to take profit along the way. Otherwise, you're going to turn into a bag holder. And how many thousands of people have we talked to that did that after 2017, right? So, yeah, I guess we just got to be careful, but also just stay dialed in because you never know how long the party's going to last.
It's true.
Yeah. Also, talking about super smart people that only say accurate things. Ray Dalio, what is his role now? He's not really managing the fund anymore.
No, he's probably some like chairman emeritus. I forget his exact title.
He's just talking and writing books and shit, right?
Yeah.
But anyway, this is kind of old news, but I did want to bring this up. Ray Dalio on Bitcoin. Good probability it will get, quote, outlawed by the U.S. government. So, look, I don't want to say that this won't happen, but I think the probability of it happening is very, very small.
You have talked about this actually yourself as a potential black swan or maybe gray swan that's like out there as a small probability.
Yeah. I mean, it's something that could happen, but I don't think the government's going to do that because that would be the dumbest thing that they could ever do because capital flight. And I know I'd be like, all right, see ya. U.S. was good to me, but I'm out. If they did that, that would be kind of the canary in the coal mine that this is the end of the U.S. as we know it, in my opinion. And look, with all the development, with all the cities and the states, you know, I think it was yesterday, the governor of Texas, Abbott, was like, hey, we're going to be crypto friendly as well. At least we're open to creating crypto friendly regulations and laws. You got, the mayor of Miami that stepped up saying, they actually bought it on their balance sheet, if I'm not mistaken. You got Wyoming, a couple other places that are competing for this capital and talent. And I just don't see a clear scenario where the U.S. government goes, it's illegal. Because if they did, that would just be, I think, a downhill spiral. I don't know. Do you guys have what's the counter argument to that? Tell me why I'm wrong.
I think if it became more of a threat to the U.S. dollar in terms of daily transactions, or there was more faith being lost in the actual dollar currency itself, then the U.S. government might see it as more of a threat. But we've seen the comments from Chairman Powell just like last week or the week before, where he considers it more an alternative to gold than a threat to the U.S. dollar. So as I see it right now, given what we've seen and the comments that we've seen, most of the influential U.S. policymakers have not come out against this in a way that suggests that it's likely. Plus, when you have houses like Fidelity and other investment firms investing capital and trying to get behind ETFs and trying to get allocations for people's IRAs and 401ks and retirement accounts, it becomes less and less likely that the government would ban it, right? You've even got companies like Coinbase that could go public at massive valuations and be part of people's portfolios. So it just seems more of a stretch to think that, one, that the government even sees it as a major threat right now, but also, two, that they would even, that if they tried to do that, there'd be a lot of political pushback and a lot of lobbyists and pressure coming from the other side against them.
I think it would be one of those things where they would only do it when it was too late, and it was like the last, potential saving grace of the dollar, where if there was such hyperinflation, they're like, all right, we got to throw out all the nukes that we can, and one of them is just banning Bitcoin, knowing that it really wouldn't work, because every country we've seen that's actually banned Bitcoin adoption goes through the moon. Like, it's like, oh, okay, you're going to ban it? Well, then we really need to use it, right? So,
I think that's a great point. If you did have a hyperinflationary type of environment, again, which is the type of environment you'd see that uncertainty about the actual U.S. dollar currency, then I think the risk goes up a lot that you might have some actions taken by the government. Right now, I think it's pretty benign. So maybe Dalio believes that we're headed for hyperinflation. I think perhaps if you thought that, then this would be a bet that you'd make. But I don't know. I don't see that today. But I do see inflation risks out there. We've talked about that. I don't see hyperinflation type of levels of risk in the near term. We'll see what happens.
One thing I want to say, and then we can move on from the regulatory stuff, but the SEC just sued Library, the YouTube competitor, yesterday or today. And I also tweeted about this, but even though we've got a lot of like local governments, like city and state governments stepping up, trying to be crypto friendly, like on the security side, like that's still a mess in the US. And there's still just so much uncertainty there. And like, I feel like that was such a bad move on the SEC's take. Like, there are a lot of blatant scams out there, but this is a company, and I'm not going to speak to, how they launched the token or anything like that, but they're actually building a real product and they're trying to add value in the world. And like, I don't know, there's just so many things that are just fishy and weird. And like, why did they go after them? And I mean, they may have a valid reason, maybe not, but there's just no clarity right now. And it's like, if you don't let entrepreneurs and investors feel confident in what they're doing and the way they're doing business, if you don't give them clarity, then they're going to leave, or they're just not going to do business in your jurisdiction. So I don't know. If anybody from the SEC is listening, like, help us figure this out. Like, a lot of people are trying to do the right things, and I just feel like a lot of people are getting scared of even working. I've had developers reach out saying, like, I'm either gone or I'm not going to do business in the US, or I'm going to go work for a company in Malta or something. And investors too that are like, I can't participate in ICOs. It's just a weird time, and I hope the US gets its shit together.
Regulators, unfortunately, their actions are, one, usually late when it comes to timing, but two, they are often overdone when they do come around to actually regulating things. We saw this in the wake of the financial crisis and things like that too. You go from having like totally lax regulations to all of a sudden having way too many and like it
Yeah.
starts to hurt people that it wasn't intended to hurt.
Yeah.
And they're just arbitrary decisions, I think, at the SEC about who they go after when it comes to anything related to securities laws or anything like that.
Yeah.
You'll see people that are heads of major corporations telling the SEC they can suck it.
Yeah, literally. Yeah.
And get nothing.
And getting nothing. And then the small fry who accidentally did something wrong gets hammered
Or
by the
didn't
SEC.
know because
Yeah.
it's all gray areas and
Yeah.
nobody really freaking knows the rules, you know?
Yeah.
My guess is it's just a collection of people there at the SEC, and their priorities are based on things like politics, things like somebody getting their feelings hurt maybe occasionally. Maybe their family member gets hurt by a scam, and that's what happens, and they get on the case. I don't know. It's hard to say. It's very arbitrary.
This is a good time to answer Joe's question. And he asks, at what point would you all change citizenship? Taxes are definitely going to go up in the U.S. in all categories to pay for all of this.
Yeah, I mean, that's, we talked about this last week, and I felt like we were just kind of like expressing our opinions off the cuff without really too much deep thought. Well, at least that's what I thought about my comments after the fact. I was like, oh, I'm not really ready. And, but I'm every day that goes by, I just see more and more evidence for having a plan B, and having an alternative route because of all the money printing. And it just doesn't seem like it's going to stop. The out of control and unclear regulatory landscape that we're trying to navigate ourselves through. And just the political divisiveness and all the weird stuff that's happening. Like,
So
I
at
don't know,
what
man.
point would you leave?
At what point would I pull the trigger?
At what
There's a
point
couple of things that would cause me
would
to
you
go, I'm
change
out for good.
citizenship?
Number one, and I wouldn't wait. I don't want to wait until it's too late for this. But the thing that would make me go, I'm out completely, is if there was some kind of anti-crypto regulation that came down the line, either banning Bitcoin or saying crypto startups are illegal, or the regulators just start hammering people left and right, and we're just going, what are you guys doing? Like, that for me would be a signal to get the hell out and to just not do business in the U.S. and find a more friendly place. What about you guys?
I'm a bad person to ask. I'm going to defer.
No, you. What's your opinion? You're like, I'm gonna stay no matter what.
I don't know.
It's a tough
It'd
decision.
have to get really bad. It'd
Yeah.
have to get really bad.
Yeah, for me, I think it's maybe I need to define it more specifically. Right now, to me, it's kind of like the Supreme Court's definition of pornography. Like, you know it when you see it. So, like, it's sort of like, for me, I'll know when it's time.
Yeah.
If it's time to get the heck out. But it also might be too late at that point. You
Yeah.
know, like, that's the risk, is if you get caught at the wrong time, with the wrong timing on something like that, you may not be able to get out with the things that you want to get out with at the right time. So.
I think it makes sense to have alternative plans in place and to diversify your asset holdings and where you hold them, right? But yeah, I mean, look, I grew up in the U.S. I've had a great life here, a lot of benefits. There's still a lot of great things about the U.S., but the writing's on the wall in certain scenarios that I'm just not comfortable with. So
Yeah.
I don't know, we'll see. All right. Next up on the docket, man, that was kind of a depressing little stint there, talking about regulations and lawsuits and all that crap.
Yeah.
Well,
Let's flip the coin and look
Lift some
at
spirits. Comedy.
Saturday Night Live had a skit on NFTs. So NFTs are going full on mainstream. I think this is really fun and really cool. And obviously it's a bubble. We've talked about that. In the short term, yes, NFTs are a bubble. People are paying way too high prices for shit they don't understand. It's the same mentality and the same behavior we saw during the ICO boom. So people will lose money. But beyond that, NFTs are absolutely here to stay. And there's going to be some really awesome use cases for this in the future. And, if we can get some great memes and music videos out of it in the meantime, that's awesome.
NFTs moved into the collective consciousness much faster even than ICOs, I feel like.
Oh, yeah.
Yeah.
Because, look, ICOs were boring and most of it was bullshit. It
Yeah.
was, we're going to create the decentralized project of insert whatever. Like, and it's like, you don't really need a token for that, or to even decentralize it. It's better centralized. But NFTs are like, there's so many more use cases and it's so much more fun. So it spreads, like you said, more virally. And it's mainstream now, dude.
Yeah.
And that's pulling a lot of new folks in.
Yeah.
Yeah. Awesome. Okay, cool. So next up, we've got the CME that are launching micro Bitcoin futures.
Oh,
so
nice.
In the future, they're going to have particle futures, because as the price goes up, they're going to need to keep releasing smaller and smaller contract sizes. But yeah, basically what this is, I forget what year it was that they came out with the indice micros, but basically this allows you just to have a smaller trading account and to be able to trade these, which I think is interesting. I think people that try to day trade the futures are going to get crushed, just like all the other futures markets today. There's so many algorithms and it's so competitive. Like, your average retail person can't really day trade and make money in the futures markets anymore. We've been talking about that for several years, but this, I think, if you want to hedge, if you want to, basically hedge, I think this could be a good option. What do you think, Trav? I know you've used futures for hedging.
Definitely. I love micros because of that reason. You can actually dial in your hedges a lot more tightly, especially if you have smaller account values, because even I think the CME Bitcoin futures, it's a 5 Bitcoin per future, I believe, the underlying, or not the underlying, but the actual contract multiplier is 5 Bitcoin. Yeah. So roughly today, that's almost, $300K worth of value for one CME Bitcoin futures contract.
Yep.
So if you're trying to hedge, $100,000 worth of Bitcoin exposure, you can't do it with one contract. So with micros, usually they have about 1/10 or 1/100th less per contract. So it might be something like half of a Bitcoin or 1 Bitcoin. I'd have to check the specs, but that means then the value of one micro contract might only be 50,000 or 100,000. So you can actually do smaller increments with the futures.
Yeah. Yeah, I think it's helpful. I just think people need to be careful to not get trapped in that, like, trying to day trade game, because you'll get ripped apart in today's markets.
Yeah, and as you know, there's leverage that is allowed in futures that's often much higher than what you might get in a traditional asset brokerage account.
Yeah.
So futures can have embedded leverage. You may only be required to put up 1/10 or 1/20th of the margin, or 1/10 or 1/20th of the contract value as your initial margin, which means you can lever up.
Yeah, and I just think every new derivative that launches, be it an ETF or a futures market, like, it's a net benefit over time for Bitcoin. Mm-hmm. Obviously, an ETF is going to be a lot bigger of a capital driver. This is just spot or settled in cash. So, anyway, all right. Next up, we've got. What was this, Nick? S&P 500 edges down as investors sell bonds.
We kind of talked about that already. So
okay,
I don't really know if there's much to say.
All right, next one. Democrats look at lowering Medicare eligibility age. What would you want to say about this?
Speaking of all of this, that's fiscal spending that everybody's talking about, this was an interesting point. Basically, they're trying to get the Medicare eligibility age lowered from 65 to 60. And I think that is a very interesting thing, because there are a lot of people that want to retire early, but they can't because they're like in shackles because they need health insurance.
Yeah.
And health insurance is very, very expensive in America as you get older, as we all know. So I think that lowering the Medicare age to 60 is a really interesting consideration, and I think that it's worth looking into. But obviously, the healthcare industry isn't too fond of the idea, and there are also people saying that they're worried that the workforce is going to leave sooner than they want them to. If they lower the Medicare age to 60, people are going to say, oh, I can retire at 60 or even maybe earlier, and they're worried about people leaving the workforce.
I thought this was actually going the other direction, where they were like raising the age limits because people were living longer. I didn't even know that people were considering going down.
Depends on who's in office.
True.
Well, yeah, and this is Medicare specifically, so it's separate from Social Security, but but yeah, they want they want Medicare for all eventually, to where we're in a single payer system, similar to other countries that do it that way. But with this, I mean, I don't know what's going to end up happening. Obviously, there needs to be a vote on it. There are going to be a lot of people probably lobbying against it. Some people wanting it to happen, but they are afraid people are going to leave the workforce earlier than they want them to.
Hell yeah. And you know,
like,
as they probably should, you know, enjoy life.
I'm over here and I'm like, let the people retire if they want to retire. Like, you know, I know a lot of people that are ready to retire and they're literally only working to get health care. Yeah. And I just don't think that's fair.
I mean, a lot of people look at us, you know, friends in Europe, Canada, other places are like, man, you know, it's a very sad situation in America. You could have an accident and just be bankrupt or have financial problems for the rest of your life because you got sick. Yeah, it sucks.
It's unfortunate. Yeah. And obviously one of the concerns with this is the cost of this. And my personal concern is they're claiming, you know, lower income individuals won't see tax hikes. But come on.
Who knows?
You know.
What do you think, Trav?
It's interesting to think about. One of the things that is a longer term secular trend that I've been thinking about is the potential for the average age to start increasing again, because we do have an explosion in gene therapies and cell therapies. And I mean, look at the vaccines that were developed, the mRNA vaccines, right? There's a whole lot of new breakthroughs that are coming to the market in medicine and healthcare in the next 10 years. And that could extend lives much, much longer in terms of, you know, average age that people live to. So what if you have people living longer, but you're trying to actually lower the eligibility for retirement? There's a
that'd
mismatch
be a problem.
there.
Yeah, that'd be a problem.
And you'll hear a lot more stories about people that are 70 or 80 having to go back to work because they didn't budget enough savings or something happened, right? So I see both sides to this. It's a really complex issue. I don't know that I have the solution, that's for sure.
I agree. There are two sides to it, and you can argue for either, or it sucks because as, you know, a human, you want access to healthcare. You don't want to be bankrupt by your healthcare bills. As someone who's getting older, you want to be able to retire and not have to worry about getting access to healthcare. But on the flip side, this shit ain't cheap either.
I think that's the problem. And granted, I'm a complete idiot when it comes to this. Like I don't know anything about the medical field other than things just seem egregiously expensive in the U.S. Like you know, a spoon is like $500 at the hospital, or you know, you go in for a headache and you get a $5,000 bill, right? Like the system is broken, and until you fix that, it doesn't really matter.
I
you know,
agree.
it's like you could provide better healthcare, but you got to fix the pricing problems first and the perverse incentives. Without that, nothing works.
That's a great point.
Yeah, I mean, look at what is it? Good RX, right? I mean, they're able to basically get people prescriptions for way less discounts, and it's like, why can't the consumer just get why does it have to be so marked up? Why can't the consumer just get access?
It's almost like they got to just like do the money grab wherever they can because they're getting bled out different areas. It's just weird, man.
Yeah,
I would hate to work in that field. Yeah.
Yeah, sorry, I did cut you off.
No, you're fine. Yeah, just a weird situation.
Yeah, we have friends who are pharmacists, and they talk about how perverse it is having to deal with some of those middlemen and how weird the incentives are, and they're not aligned. Like, consumers not aligned with their doctor, aligned with the pharmacy, like all these different people, and then pharmacy benefit managers, they're in the mix with really screwed up incentives, and then of course drug developers, the people that are pricing those drugs, especially on orphan drugs and things like that, where you only have one possible treatment for a given disease and they're marking it up. Look at the EpiPen, the whole thing with that, right, where they jacked up the price of that 5x in a year. And there's just, like you said, there's just rot in the American healthcare system that has to get rooted out first and foremost before you start to give everybody money and put everybody on, you know, healthcare plans that are going to be paid for everyone else.
And that's just another, you know, case for getting out of the U.S. You know, there's other places that have great healthcare for pretty cheap.
That's true.
Yeah.
Well, you got to pay taxes, though. I mean, I guess if you know, they have higher tax rates.
So some
Much
places
higher.
do. Yeah, some places have much higher tax rates.
But you can
some
get-
places like Southeast Asia, you can get good health care for very, very inexpensive.
Pay out of pocket
Yeah.
to get health care.
Yeah. Talking about expensive things, U.S. home prices rise at fastest pace in 15 years. Man, I am having PTSD from the housing boom and bust of the early 2000s, which I was on the front lines of that. Oh, man. I know here in Austin, it was, what was it? What did I say, Trav? 25% year over year? And, you know, people...
Mental.
Yeah,
That's insane.
I think the numbers are what we have. There was like 600 homes on the market and 200 people a day moving here. And if you go on the Austin subreddit, you can see, you know, people posting like there was a $400,000 house. I bid $125,000 over asking, and I still didn't get the house.
Wow.
Like this is runaway housing inflation. Like, granted, it's not happening everywhere, but yeah, this is pretty wild.
It's happening in many U.S. cities, though.
Yeah. Yeah.
What did Colin Roche call it? Assflation?
Assflation? Why do you call it that?
Asset inflation.
Oh,
you know?
assflation. Yeah, that makes sense.
Assflation. Oh man, I was laughing on Twitter about that. That's
Yeah.
another reason to be on Twitter. Yeah.
I mean, so I guess the idea right now is just like you want to have cash for dips, but if you sit in too much cash for too long, it's like, you know, going back to Dalio, like cash is trash, man. Like you've got to get into hard assets, Bitcoin, property, good stonks, you know, not overvalued, you know, speculative stuff. So
The one asset that's not really playing its normal role is gold.
oh yeah, let's jump over to gold.
At least not on the, you know, the paper or the financial gold side.
Yeah, gold actually looking really, really weak. So if we do a comparison, actually, let's do this. So if we just compare gold to Bitcoin, let's just do a daily. And, you know, let's maybe start from the beginning of the year. You can see gold is down, what, as of today, from the highs of the year, it's down around 15%. Where Bitcoin is up on the year, you know, call it 100%.
Negatively correlated.
Yeah, it's very interesting. I mean, and I've read some stuff about how capital's actually flowing out of gold into Bitcoin, you know, which makes sense. And I saw, so Peter Schiff's son actually trolls him. And I think today or yesterday he said, like, yeah, I've just sold or I'm about to sell my last gold assets, whatever he had. And like, man, that would suck to have your son counter trading you.
And I'm just beating you up.
Yeah. Oh, there must be something strategic there, though, where it's like, all right, son, I'm the gold guy, you be the Bitcoin guy. Therefore, like, no matter what happens, one of us is going to be right, kind of thing. I wouldn't be surprised if that conversation was happening behind the scenes.
That would be pretty smart of them, wouldn't it?
Yeah, I mean, we're sitting here talking about them, so they're doing it right, I guess.
Yeah, yeah. All right, well, let's jump into what you guys are talking about. We've been kind of chatting amongst ourselves, but let's look at the chat here and just look at some questions. Throw in some questions, throw in some comments.
Peter Schiff is sitting in a closet crying. Oh, that's funny.
Yeah. Will a S&P sell-off in the near future pull down tech stocks further too?
Potentially.
I mean, so that's more like a Nasdaq type play.
But the S&P has tech stocks in it.
That's true.
It's
true.
24% information technology.
Oh, look at
So-
that. Lisa says in all weird caps, guys, you think it's good time to buy a house?
Depends on the market, right? Like,
Yeah.
depends on where.
You got to look at property taxes. Like, that's the thing that I think about, because here in Texas, we have some of the highest property taxes, and I feel like people aren't even thinking about that. Like,
No.
you buy $1 million house, you're going to be paying almost $30,000 a year in property taxes in perpetuity, and that number only goes up.
Yep.
I'm
And
like-
Austin specifically is aggressive with their property tax valuations.
Yep.
You know,
Yes. Yeah. Awesome. I mean, look, I want to own as much raw land as I can where it rains or has water access. I know, California and the West is kind of popular, but people are leaving California at record rates, and B, like, I don't want to be somewhere where it's going to be a challenge to get
Mm.
water rights. So that's what I'm doing. I'm buying up land. What other questions you guys got?
James asked, "What do you think about weed stonks?"
Weed's gotten crushed recently, right?
Yeah, a lot of the cannabis stocks have come back down to earth. They
Yeah.
had a resurgence there at the beginning of the year, and then a lot of them have come back down to earth.
Yeah.
But they were a little bit ahead of themselves. There is some interesting stuff happening with New York pushing forward on legalizing marijuana, which was anticipated for a while, but is finally now actually happening.
Yeah.
So that should be good for them, and then other states as well will be moving forward on that issue. So I think the industry's improving. It's starting to come out of some of the oversupply. Like, you're starting to see the financials improve on some of these companies. But like I've said before, I just don't love the growers. I don't love the cannabis flower producers.
Yeah.
Don't we need to see more consolidation amongst the flower producers?
Yeah,
And-
until Ray Afrio was the first big one, and I think we need to see some more mergers in that space.
Yeah.
There also are a lot of private players still out there that aren't publicly traded that are also competing.
I mean, the barrier to entry, would you say, is fairly low
Yeah.
to become a grower?
Yeah.
And that's what makes it difficult. Like, where's the moat?
Yeah.
That's why, companies like Weed Maps, which is like a marketplace, so to speak, or I don't know, a Yelp and an Uber had a baby and created Weed Maps. I don't know.
Yeah.
But that's a bit more interesting, I know, to us on the marijuana or the cannabis side.
Yeah.
Yeah.
I got a question here. Well, I guess this isn't a question, but somebody said, you never mentioned Monero. Yeah, I guess that we don't really bring up a whole lot of altcoins on here, but we can run through a few of them. I'm actually a fan of privacy coins. I own, full disclosure, Monero and Zcash. So I actually have a recent trade on this that's open. I was buying Monero here in like the 100 to 150 range in January. And then we hit my first profit target up here around 280, but I think this was the week that we lost power during the Texas snowpocalypse. And so I'm still holding the full position. Also on Zcash, was buying here. You can see we had like a breakout of this multi-year resistance that started to turn into support. So I've got some open trend riders right now. I'm a fan of privacy coins, but there's also a layer of risk that comes with these, which is delistings and not so friendly regulation because governments don't like privacy coins. Let's see what else we got. Oh, Ethereum. Yep, still holding Ethereum. If I run through this, basically, I can't remember if I mentioned this last week, but we've got a big kind of consolidation area here, so I'm not overthinking this zone. Really just waiting for a 2K breakout. But yeah, I've been buying this as recently as down in the 300s all the way up through 1400. And yeah, I've actually got a lot of other like swing trades open right now that are just kind of working. I try to stay away from smaller cap stuff because, again, I don't want to move markets. I don't want to get stuck in trades. So I mostly stick to larger cap things unless I'm accumulating at low prices for like multi-year holds. But right now, a lot of stuff has just been up so much that I really don't. I haven't been hunting this month, but I think things have been cooling out, and we might get another momentum push. Yeah. What do you guys do most of the time you're not looking at the markets? It seems like you guys spend 2 to 4 hours a week to keep up with the markets. Yeah, I mean, look, we're not active day traders. We're not sitting in front of our computers all week.
I spend a lot more time than 2 to 4 hours a week, though.
Yeah,
Yeah.
I was going to say.
Yeah. There's a big difference between my lazy ass and then Travis and Nikki. Why don't you guys talk about like what your schedule looks like? Because that would actually be a good topic.
Yeah, that is a good.
I guess it's interesting too because I don't think of you as lazy whatsoever. You spend a lot of time thinking about looking at different, not only prices in the markets, obviously for some amount of time per week, but also like thinking about trades, thinking about things that are happening in the macro economy, like reading pieces, looking at fundamentals. Like you
Yeah.
count that time.
Well,
in there,
I consider myself lazy compared to you because you're doing deep fundamental research on companies.
not every day and every week.
Everyone's
Yeah.
lazy compared to Travis.
No.
Yeah, no, I mean, I do have a daily routine where like I'm religious every single day, even on the weekends, unless I'm super hungover. I wake up and I go through my list. I go through my open positions, my watch list. I go through news. I plan different things. I'll usually do a deep dive on a project or two at least once a week or twice a week. But yeah, what does a day look like for the Stock Geek? Because I know your stuff is deeper, obviously on an institutional kind of professional level.
Yeah, I spend at least probably 3 to 4 hours a day just reading through filings from companies, looking at different metrics, maybe looking at screeners or looking at the recent insider buys, just looking for signals.
Yeah.
Just constantly trying to churn through the haystack looking for the needle. And there's also stuff that happens on the existing portfolio. So my mornings usually look like just catching up on what's happening in the markets and with my specific positions. Like if the company dropped news that I need to know about, like I'm trying to hit that first thing. And so the early part of my day is usually just focused on like market action, company specific news. The later parts of the afternoon and evening is when I try to prioritize like doing deeper reading through filings or S1s, maybe even popping into a model or reading a research piece or something like that, thinking about, doing that deeper work, deep work.
But what do you do when you're not in the markets and researching?
Wake surf.
Getting those
I think
gains,
yeah.
pumping iron.
Oh, I used to work out before COVID.
COVID. Oh my God. Yeah, trying to get back in the gym's been a bitch.
But we've been riding bikes too.
That's true. That's
been
true.
good.
Doing some mountain
Yes.
biking, doing some wake surfing. Water's
Yeah.
finally warming up.
Got to keep
Yeah.
the body right, keep the mind right.
Yeah.
Yep.
And
Nikki, you've been working out a lot.
I've been
You've been the
trying.
most disciplined out of all of us.
true.
Yep, trying to lose the COVID weight and gain back some muscle
Yep.
and not work as much. I am really bad at just sitting at my computer and like reading for hours.
Yeah, you're a
whatever it
nerd.
is.
You go deep with tax
I'll be
law
on
and
the
all
IRS
kind of stuff.
website for hours.
Oh my God, that sounds like a nightmare.
It's the
What is
strangest
wrong with
thing.
you?
And so I've been trying, to commit, start doing something for at least 1 hour a day that you love doing that's fun for you,
Yeah.
And so I've been going back to the gym or trying to skate again. For those of you that don't know, I'm a roller/figure skater. I do both. But, just trying to do fun things, get the mind out of the computer for a little bit.
Yeah, absolutely. Michael Roberts was asking, do you expect Apple to get on the crypto train this year, possibly launching a wallet or a PayPal style exchange?
Wouldn't surprise me.
Yeah, it wouldn't surprise me either. I mean, I'm almost certain that they have people working behind the scenes on this. Are they going to add $1 billion or more dollars to their balance sheet? I don't know. Trav, do you have an opinion on that?
I don't have a strong opinion on whether or not they're going to add it to their balance sheet. They have such a large cash and investment hoard on their balance sheet. It wouldn't surprise me to see them maybe do a small Bitcoin allocation. But Apple's Treasury Department's a little bit more conservative too, so I could see it going either way on that front.
Yeah.
When it comes to the Apple Wallet and those kinds of products, I don't see why they wouldn't try to add that capability.
Yeah.
Yeah.
Square's doing it, PayPal's doing it. You're going to get left behind if you don't do it in
Yeah.
payments, right?
Yeah.
So I would expect that becomes something at some point.
Yeah.
For them.
Yeah. I mean, it would be really nice to have that as a white swan event this year too.
For sure.
Yeah.
Especially for my Apple stock.
Heyo.
Yeah. What do you think about Dogecoin? I mean, look, it's a tradable asset. I don't, in general, I don't hold altcoins as investments in general. I hold Bitcoin, Ethereum, some privacy coins, a few other Ethereum competitors, like more longer term. And then in the shorter term, I trade altcoins to accumulate more Bitcoin or accumulate more fiat that I can invest in Bitcoin or other assets. But, when it comes to Doge or, any of these DeFi kind of momentum plays, like some of them I'll keep a core position for years, but there was a chart that came out, it was floating around on social media that was showing how every altcoin has underperformed Bitcoin over time. Will there be a flippening and will Ethereum grow or will another one grow? Maybe. But my allocation kind of reflects the market cap leaderboard in a lot of ways. Like my largest position's Bitcoin, then 2 is Ethereum. I skip Ripple, you know, and some of the others that I don't feel like should be on the leaderboard. But yeah, I don't know. I don't really have an opinion when people ask me like, what do you think of this or what do you think of that? I'm like, well, what do I think of the chart in the short term? Is there a trade? That's how I generally think about most altcoins.
Right on.
Yeah. What about Tiger? Oh yeah, are you guys
Tiger.
still holding Tiger, or you guys have cut
Nope.
out of
I
that?
closed my runner. I'm officially done with my Tiger swing trade.
Nice.
was
So
a
you
good
guys
run.
bought the $8 breakout, right?
Yep.
Was it 8?
Yep.
And
Scaled
then
out
where-
on the way up.
you
Might
guys
have
are
even been
scaling
a
up.
little lower than that, I think. Was that
maybe.
where was your initial entry?
That's just where I have the arrow
I don't
from.
even remember, to be honest.
$7 or $8
I
sounds
Yeah.
think, oh, you know what? I
about
think
right.
I think I scaled in before it actually did the official breakout, and then I added
Yeah.
on the official breakout.
Okay.
Yeah.
And
Well, I
then
was-
where did you guys close out?
So I scaled out like
Along the way?
along the
In
way,
the teens
3
and the
different
20s,
times.
right?
Yeah.
20s, I think, were the mains.
Yeah, I think my highest scale out was maybe around either mid to high 20s. And then it was spiked a little higher, and unfortunately I didn't
Didn't catch the exact
I
top.
didn't catch the exact top, and I just held a runner just in case.
Yeah.
But it was a good run. Trav tipped me off on that chart, and I was like,
Yeah, that's a great one.
yeah, it was a.
What was it that made you pick it up, Trav?
Well, it was trading. So the background of this company is that they're kind of an upstart Robin Hood of China. They are a new age brokerage firm with their app and everything like that. That is, you know, kind of on the forefront of retail investing in China.
Yeah.
So there's another one called Futu that is also getting pretty big. They're both growing very, very fast. Futu has the benefit of partnering with Tencent, so they're actually integrated in the WeChat app.
What's their ticker? Do you know?
Futu, Futu.
Oh, okay.
But Futu had taken off, and Tiger. So they're both growing at revenues at over 100% year over year.
Wow.
And you've got obviously exploding retail interest in investing, not only here in the U.S. but in other countries like China as well,
Yeah.
globally. It's kind of a global phenomenon, even in Korea and Japan.
And Indonesia, I'm learning.
Wow.
There's been an explosion, largely because people are home because of COVID, in trading, and because the markets have been, you know, pretty fruitful. So anyway, so basically you've got the Robin Hoods of China that are already public, and they're public here in the U.S. So Futu and Tiger, and I noticed Futu was starting to take off. Tiger was still at a pretty low valuation when I was looking at it, $4 to $5 a share. And, you know, again, the fundamental business is pretty good. They're growing at like close to 150% year over year off small numbers.
Yeah.
Another thing I noticed was that Interactive Brokers, which is a really established, large, publicly traded broker that I personally use, has a stake in Tiger. So there's, you know, a stake there that's kind of given them some legitimacy as well. And it just looked to me like it was being underappreciated in a world of people chasing growth stocks.
Yeah.
I thought maybe this little Chinese Robin Hood is being underappreciated given the levels of growth.
I mean, that breakout setup was just
It was gorge.
beautiful. It doesn't
Yeah.
get much more clear than that.
Mm-hmm.
Yeah.
I looked at it and I was like, I'm in.
Nice.
Relatively low float and low volume at the time too, which can
Yeah.
give you those explosive moves in a short time.
Yeah.
Yeah.
I mean, this kind of goes with my thesis too, which is I just love companies that get a piece of the pie in the trading world. You know, crypto exchanges, DeFi, you know, like Uniswap. I bought Uniswap pretty early. Anything like this where it's like you just get a piece of the action, like you're the bookie or the casino at some level, right? Like those are just cash cows.
Yeah.
As far as where to go from here with it, I didn't look at the latest earnings report, so I'm not quite sure what things are looking like fundamentally.
Still pretty solid. I think growing about 130, 135% year over year in the fourth quarter. It's still small though. The run rate revenue I think is about 200 million annually. Market cap's about 2 billion roughly today. So it's actually a reasonable multiple of revenue. I mean, they're not super profitable yet, so you're mostly valuing it on revenue multiples, like a lot of high growth stocks. 10 times revenue for a company that's growing over 100%
Not
is
bad.
not bad at all, really. So yeah, I do think it could have some upside still from here, but you've got this big risk with it being based in China, and as we know, a lot of Chinese stocks have started to come under pressure valuation-wise, the ones that trade in the U.S., because of this issue about potential delisting. The U.S. passed some laws in the last few months saying that Chinese companies that are listed in the U.S. have to comply with U.S. audit standards. And the problem with that is U.S. audit firms won't sign off on Chinese accounting because they don't have access to all the records that are actually at the offices of the Chinese auditors in China. So there's a lack of cooperation between Chinese and US auditors. I know this is like a really wonky thing, but it matters because there's large Chinese companies, multi-billion dollar, hundreds of billions of dollars of market cap at stake here. Alibaba, Tencent traded over the counter, but Alibaba, Baidu, JD, lots of major Chinese companies that could potentially be delisted if within the next year the U.S. and Chinese auditors can't work out a way for the audits to go forward.
What does that look like for the ETFs that invest in these companies? Because I know a lot of people in retirement accounts have these ETFs that have pretty decent holdings in these companies. That's gonna be something.
It's a real problem. Not a lot of people are paying that much attention to it yet. Maybe some traders are, but there's a real issue. Like, these ETFs are going to have to jettison these stocks if within 9 to 12 months this issue doesn't get resolved.
Yeah.
So it's a real problem. And some companies, it's thought, companies like Baidu that have listings in Hong Kong and the U.S., that maybe the U.S. holders will be able to exchange their U.S.-based shares for Hong Kong-based shares. But not all brokers are going to allow you to do that or allow you to trade Hong Kong shares. So it's a whole mess.
Damn. That's crazy.
So Chinese stocks trading in the U.S. carry this extra risk right now until this gets resolved, and that could weigh on the valuations for Chinese stocks this year.
So good to maybe just stay flat on Chinese stocks for now, huh?
Yeah, I mean, I still own a little bit of my Baidu, but it's tough to add new Chinese stocks to the portfolio knowing that there's this big issue that isn't resolved.
Yeah. I don't know. Is that something that you can front run and like buy in anticipation of it working?
It is. I mean, it could be a potential opportunity to buy into these companies at cheaper prices, but I would like at least some indications that there's progress on the audit issue.
Right.
And I haven't seen enough of that yet.
Makes sense. Cool. All right, let's do a couple more questions, and then we'll head out of here. I know we've been going a little long today, but
wow, yeah.
Hopefully you guys are enjoying this. Got a question. How do we know when the top is in? Feels like every dip we get is called the top. When would you guys start scaling out of any spot positions? So yeah, that's the thing. That's why my saying that I think I coined is the trend is intact until it isn't. Like, I don't try to pick tops. I have no damn clue when the top's going to be. In fact, whenever I try to pick it, I'm usually wrong. Like in 2017, I sold a pretty significant amount of my 2015 position in Bitcoin in between like 5 and 8K. And I was like, man, there's no way this could keep going. And guess what? It like doubled in the next 3 weeks. So whenever I try to pick tops, I leave money on the table. So I am a buyer of long setups as long as the trend is intact and until there is some kind of sign that there's a blow off top, either an unsustainable parabolic move or a shift in market structure where it's clear that the trend is over. But in that case, you're not selling the high, you're usually selling lower. So you're like paying for the confirmation there. So, and that's what makes trading interesting is you don't always know, right? It's like you're making decisions with incomplete information based on an uncertain future. So you can do the best you can by analyzing everything. And all it is, trading is opinions from one person to the other, right?
Yeah.
I might think Bitcoin's expensive. You might think it's cheap, right? And that's what makes trading fun and competitive, right?
I mean, a lot of it too depends on, what your plan of action was going into it. Like if you went in to a swing trade and you've seen an outsized move that is just like we saw on something like GME or Tiger, very fast, very big percentage moves quickly, or it could happen in Bitcoin too. It's happened. Then you can kind of compare it to prior moves and say, okay, this is abnormal movement. And it kind of helps you dial in, your profit taking and helps you manage, okay, if this rolls over from here and I don't take profit, I'm going to be really upset with myself. So I think,
Yeah.
you know, it also depends your time frame and in terms of how fast did it go, and should you be really considering.
Yeah, this is an example of one that just got ridiculous. Like Rocky, aka Crypto Hustle, in the chat room today was, you know, he's been scaling out of this, but this is one of those examples where, you know, when price just starts taking off, it's like which green day is going to be the pivot high.
Right.
You know,
you don't know.
You don't know until the show's over, but you can look at something and go, okay, it's up 2,500% in the past, you know, month or two. Eventually that's going to top out, right? And so if we go down to a daily chart, you can see we had 2 monster green days where it basically doubled in 2 days. Like you either preset profit targets and say at these levels, this is where I want to get out, or you let price action be a guide and you look for signs that a top is in. And again, sometimes you'll sell early. I've left millions on the table on certain positions where I closed too early. And in hindsight, it was like, oh, wow, that was just the start of the trend. That's why I usually don't go all out, right? It's like, leave a runner, man, leave a moonshot. Even if it's not a massive position, at least you're going to, that little position can turn into a big position.
Yeah, I mean, scaling is really the only way that you can really take advantage of the unknown top. And even then, you're still not going to get like with Tiger, you know, my swing, I still didn't get the full top, but, you know, that's the scaling helps you be able to stay for the long haul and dial.
You
that
catch
in.
the meat of the move, right?
Yeah, the meat of the move.
Yeah. Awesome. Well, what are you guys looking forward to next week? What's on the docket?
Next week, I'm going to the gym to get some gains.
Nice. Okay, so we'll see again who's right, who gets the one Dogecoin for their accurate Bitcoin call. Is it going to be Nikki with Sunday, Travis with Saturday, or me on the 15th? We'll see. Or somebody in chat. If one of you guys gave an answer that ends up being correct, I don't know what I'll send you. I'll send you something. Cool. But all right, guys. Well, thanks for watching today. Hope you got some value out of today's show. Again, this is the calm before the storm. You know, we've been coiling up for several weeks now on both stocks and crypto. And what?
I have an idea.
Yeah.
Okay. People, if you want to join on this, put in chat if the Nasdaq is going to break that coil higher or lower by next week.
On the Nasdaq?
Yeah.
Yeah, because the Nasdaq is at a really key level.
The Nasdaq is at the Nasdaq and Bitcoin are both at very key levels, but the Nasdaq really looks like it's about to bust a move.
The bear case is an extension to the downside that's going to get us to a new fresh low on the year, possibly even below the 200 period moving average, get us into bear territory. Or if the 100 period holds up, we could squeeze shorts above 13. So this is what we mean when we say like the calm before the storm. It's like it's hard to anticipate what's going to happen, but you can have plans set up to where you can respond when one of those scenarios does play out.
Yes.
So
awesome.
Yeah.
People are saying higher, breakdown. We'll see.
Yeah, it looks like it's kind of 50-50. I don't know. That's usually what happens when you're at a 50-50 point in the market,
Lower.
right?
We're 50-50 right now.
Yeah.
So then what we do is we look for the asymmetric bets that can get you your 5 or 10x on either end.
And then you raise a $5 billion fund and you lever up 5x and you blow up and lose everybody's money. Boom. Poor guy. What was it called? Archegos?
Archegos.
Oh man.
This guy though, he's had tangles with regulators in the past. He doesn't seem like the sharpest tool in the shed, perhaps.
Not the brightest cookie in the toolbox.
That's right. But hey, it's a great lesson, you know. Don't lever up 5x.
Yeah. Not with a $5 billion position, at least.
No.
If you're trading with $1 million, okay, but $5 billion, my God. All right, guys. Well, go to wetalkmoney.com if you want to submit a question for the show next week. And you guys have a great weekend, and we'll see you next time.
All right.
Take
See
care.
ya.